In the realm of investing, complexity often overshadows the elegance of simplicity. Many seek elaborate strategies, believing that intricate maneuvers hold the key to financial success. However, I have learned through decades of experience that the most effective approach is often the most straightforward. This principle lies at the heart of index fund investing, a strategy I firmly believe can empower individuals to achieve their long-term financial goals. My journey in the investment world began with a relentless pursuit of strategies that could deliver consistent returns for everyday investors. This quest led me to a profound realization: attempting to outperform the market through individual stock picking or complex trading strategies is often a recipe for disappointment. The costs associated with such endeavors, coupled with the inherent unpredictability of the market, often erode potential gains. Index funds mirror the performance of a market index like the S&P 500 or Dow Jones. Imagine an index fund as a basket of stocks representing a market segment. An S&P 500 index fund holds shares of all 500 companies in the index. The beauty of index funds lies in their simplicity and transparency. Investing in an index fund means owning a small stake in all included companies. This diversification helps mitigate risk. Index funds are passively managed, reducing fees and expenses. This low-cost structure allows investors to keep more of their returns. Index fund investing embodies a prudent and disciplined approach to navigating the complexities of the financial markets. Unlike speculative trading strategies that often rely on short-term market fluctuations, index fund investing emphasizes long-term growth and stability. This long-term perspective aligns with the fundamental principles of sound investing. By staying invested in a diversified portfolio of stocks through an index fund, investors can ride out market volatility and benefit from the power of compounding returns over time. Furthermore, index fund investing encourages a disciplined approach to saving and investing. By consistently contributing to an index fund over an extended period, investors can harness the power of dollar cost averaging, a strategy that involves investing a fixed amount of money at regular intervals, regardless of market conditions. This approach helps to mitigate the emotional biases that often lead to poor investment decisions. When markets are down, dollar cost averaging allows investors to buy more shares at lower prices. Active versus passive investing, a clear winner. The debate between active and passive investing has raged for decades. Active investing involves selecting individual stocks for above average returns. Consistently outperforming the market is exceedingly difficult. High fees can erode investor returns over time. Most active fund managers fail to beat their benchmarks. Passive investing accepts market returns. Index funds replicate market performance. This approach captures market growth at a fraction of the cost. The Vanguard effect. The advent of index funds revolutionized the investment landscape, empowering individual investors and challenging the dominance of traditional financial institutions. At the forefront of this revolution stood Vanguard Group, a company I founded on the principle of putting investors first. Vanguard's mission has always been to provide investors with low-cost, high-quality investment products and services. This commitment to investor interests is reflected in our unique ownership structure. Unlike publicly traded asset management companies, Vanguard is owned by its funds, which are, in turn, owned by the investors in those funds. This structure ensures that Vanguard's interests are aligned with those of its investors. As a result, we are relentless in our pursuit of lower costs, recognizing that every dollar saved in fees is a dollar earned for our investors. This unwavering focus on low costs has had a profound impact on the investment industry, driving down fees across the board and benefiting investors worldwide. Real-world success with index funds. The success of index fund investing is a tangible reality experienced by millions of investors worldwide. Countless individuals have achieved their financial goals by embracing this approach. Consider Sarah and John, who both invested $10,000 annually starting at age 30. Sarah chose an S&P 500 index fund, while John opted for an actively managed mutual fund. After 35 years, Sarah's portfolio would be worth more due to lower fees. This example highlights the profound impact of costs on long-term investment outcomes. It underscores the power of index fund investing in a real-world context. Embracing the power of simplicity in the ever-evolving world of finance, it is easy to get caught up in the allure of complexity. However, as I have learned throughout my career, the most effective solutions are often the simplest. Index fund investing embodies this principle, providing investors with a straightforward yet powerful way to participate in the market's growth. By embracing the power of simplicity, investors can free themselves from the burdens of market timing, stock picking, and high fees. Index funds offer a low-cost, diversified, and disciplined approach to investing, allowing individuals to focus on what truly matters, their long-term financial well-being. The beauty of index fund investing lies in its accessibility. Regardless of your financial background or investment expertise, you can harness the power of this strategy to achieve your financial goals.